Hey everyone, welcome back. It is March 11th. My name's Levi Woods. This is Drawbridge Finance. I hope you're having a great day. Markets are pretty red today. You can see my sign is blue. I almost never put my sign on blue, but I'm having one of these days where my portfolio is just like hovering at that. You haven't made anything, you haven't lost anything, which is a nice place to be because there's nothing worse than being down when the market's down. Or up when the market is, or down when the market's up. That also sucks. Everything we talk about here is not financial advice any way, shape, or form. It's just what I'm doing, what I'm looking at. So hopefully you guys have lots of questions. Today, we're going to jump right into this. We're going to take a look at what's going on in the markets. And yeah, there's lots going on. So jump in the chat. Let me know where you're watching from. I want to do a little vote today. So if you could kindly just say, drop number one in the chat if you think that the market's going to go up this week. Number two, if you think it's going to go down. Pretty simple. So if you think the market's up, number one, market down, number two. Put that in the chat. I see Mike Mueller's on. Awesome. Thanks for the email this morning, Mike. Hi, Kevin. Good to see you. Jody, one. I like to see this optimism. It's two down. Kevin says you can hear me. Thank you so much. I appreciate it. I'm kind of leaning towards number two as well there, Mike. Let's look at where we are. I've got the SPX up right now. We're marking right now down 0.88% over on the right, 55.68, so down 46 points. You can see on this particular chart, I should turn off some of this stuff. I've got way too much stuff going on here. This makes it hard to see. Take that off. Let's take off the VWAP, and let's just take off the volume bars as well. And there we go. This blue line. Interesting. You know, I actually just turned this on. Let me just turn it off for a second. This is the 200-day moving average. I had drawn this blue line on here, which was in some random video that I was doing. You know, we're doing this live stream and I just drew this blue line. And then today, just before I started the stream, I put on the 200-day moving average and look at how closely that represents. It's kind of wild. It's like I put it on there, but I didn't. That's just where it was. Reading some pretty interesting articles about using triple leveraged funds, but only when the market is above the 200-day moving average on the SPX. So the article basically states that if you go back in time far enough, that when we're trading in a range below the 200-day moving average, we tend to see our larger down days. So if the trend is to the downside, when we get below this 200-day moving average, triple leveraged funds don't work very well. But anytime that we're above, they actually outperform the market quite a bit because there's more up days than there are down. And the way that the leverage funds work is they typically outperform over the long term. So for those of you who are in that strategy, this is like a study that goes back to 1928, so almost 100 years, and very, very simple. When SPX is below the 200-day moving average, portfolio is in cash. When the SPX is above the 200-day moving average, we could hold some sort of triple leverage funds like TQQQ or like U Pro would be like a triple leveraged on the SPX. Those are kind of typical ones that we might look at. So something to think about when we're sitting here. Quite a bit of divergence really between the S&P 500 right now and the NASDAQ. The NASDAQ down 0.2%, S&P 500 down 0.78. Now, typically we see quite a bit of solidarity between these two. Because there's a lot of stocks that make up the NASDAQ 100 that are a big component of the S&P 500. So the typical correlation is about 91%. Today, we're seeing a little bit of a difference there. Tech sector must be outperforming slightly compared to the rest of the other 400 stocks in the S&P 500. Russell relatively flat today, marking right at that 2016 level, down 0.13%. IWM at that 200 level. So if we were to look at the chart on IWM, definitely broken out of its recent channel, definitely trading below the 200-day moving average, most definitely in a downward channel. So If we were to draw some lines on here from a technical analysis point of view, we're looking at a channel that looks like this. Let me draw that other one here. So definitely at the bottom of this channel right now, and completely broken out of the upper channel that we have been in. So from a retracement standpoint, when we were at the top, IWM was at 245. Now we're trading at 200. Let's use our calculator to just see that move to the downside. So we've got a $45 move down from 245. So this is 18% off the highs. So quite a large move to the downside. Just looking at kind of what is going on in the market in general. VIX obviously very high. Let's look at the VIX. What else do we see here? Mike, oh, you read about TQQ. Yeah, it's pretty interesting. Because I run TNA all the time, and it's been a fantastic outperformer. Mike Wheeler, I think the fun part is to figure out what to do with the money once you're below the 200-day moving average. Cash is fine, but there must be something more advantageous. Well, you can always go into something like Bill, but for the most part, it depends on your brokerage. Like if you're American and you're not getting paid those nice balances, like IBKR offers us a pretty decent return. It's dropped a little bit now. The interest rates are down, but we're still making like 2.8%. And the frequency at which SPX is actually below the 200-day moving average is pretty infrequent. But the VIX level, this is the thing we really should be talking about, because when there's a lot of fear in the market, Warren Buffett says, be fearful when others are greedy. If we look back August 5th, obviously there was a ton of money lost for anybody that was short volatility over the weekend of August 5th last year. But when we see the VIX, I mean, typically we don't see these rallies kind of happen for a very sustained amount of time. So when we see the VIX come up and we hit this level, which you can see it's been at 28 just at the end of 2024, they're relatively short-lived. These are daily candles that we're looking at. So when we saw the VIX at this level last, we had 1, 2, 3 days before it dropped below this red line, which is showing the 17 level. So only 3 days it took to retrace. Now this particular move has taken a little bit more to get up here. So volatility coming up, but are we hitting a peak? I mean, generally once we get to this level around that 28 level, and we can see this historically, I'll zoom out in a second, but when we get to this level, we typically start to see a retracement, because what's happening is there's fear in the market. Everybody's like, well, what's going to happen? What's going to happen? Well, we know what's happening right now. The market is selling off, and at some point it's going to catch some sort of bottom. And it was why I did that math on IWM, like how far down does it go? If we look back to years like 2017, I was just talking to some friends last night about this. 2017, there was no volatility at all in that whole year. In 2018, if we were to just look at a year by year basis, it only really, we got to this level twice. And in 2019, we never got there. In 2020, and for those option sellers that have been only playing since the market, since COVID, I mean, we were in a very, very good place in 2020. This was the entire year. It was above 17. This was a great time to be a premium seller. 2021, 2022, that continued. Now, 22 was a little choppier, but we're also seeing that downward momentum. Then we got into 23 and we were low again. My hope is that we stay in a period of high volatility for a little while. It would be very nice if we could replicate something like 2021, where the majority of the stuff has kind of passed by. We understand what's going on with the market. The market may be sliding a little bit, but we see these spikes come and go. we have to be ready to load up and take opportunity when these spikes happen. So, the people in my trading group know already I've been putting on trades. I've been trying to capture trades that have some upside potential from these levels, but don't leave us too much exposure to the downside. So if this continues to go down, we're actually putting on profit tents to the downside, and that gives us what's called a trap in the business. So a pretty entertaining time right now to be watching this market kind of drop as it has been. I would love to know what stocks you guys are looking at. If you're thinking about buying stocks, what are we doing? What are you guys doing out there? What stocks are you looking at? And we'll zip through some of these. We've got Apple down 3% today, so kind of a big move. And these are some of the bigger components of the S&P 500. So this is why. And NVDX, oh, interesting. So the leveraged, yeah, let's take a look at NVDX. So this is a leveraged NVIDIA trade. NVIDIA definitely being at a potential level. So here we are. This is a leveraged fund. And again, what I was speaking before about when I want to be in these leveraged funds is typically when that moving average is above, or when we're above the S&P 500 moving average, because these are leveraged both ways. So if we were to look at NVIDIA stock, I would agree that this is definitely a good time to be buying NVIDIA stock, because this is a time where we're down below the 200-day moving average. So for people that are considering adding to their long-term portfolio, obviously NVIDIA is a very, very good company. It actually has, let's look right now on, let's just look at NVIDIA. But I may not be so inclined to jump into those 2x bulls until we start to see a move. I kind of want to catch those once it starts to move up, not when it's in its current downtrend. Fair market value, according to Investing Pro, at 116. So we're currently trading at 110. For value investors, this is fantastic. Now, you'll note that this fair market value hasn't changed all that much. It was actually quite high when the stock was trading at 139. So we had some downside potential. But now we're starting to see that we're below its fair value. And this is where we might see a turn in the market, when people start to pick up companies like this. Fair value of Apple still trading 12% higher than its fair market value. Let's look at Amazon. Let's just blast through all of the Meg 7 here. Amazon's trading at 196, fair value is at 208, so there might be opportunity there. Tesla, obviously, way down below its fair value of 251. We're trading at 232 right now. So Tesla would be one of those stocks I would be watching for longer delta positions if I wanted to put on something like that. What else do we have? Meta, I believe, is also slightly above its fair value. So we've got it's trading at 605. It's come down quite a bit. Like when it was at 736, people could think that it's going to just continue to go. But one of the things that we can do as investors is we can really watch fundamentals, and we can say, is this a fair value to be buying that stock? And I wasn't purchasing shares at 736. I can tell you that much. Now that we're getting down towards its fair value, well, now we're in a sweet spot, because if I was to sell a chart, or reading here, if I was to sell an option on Meta, let's just take a look at the contracts and see where that 437 or 530. Losing my brain. 577 level is. If we go to the options chain, looking here on Seeking Alpha, which has a quant rating of a hold, valuation is still an F. So they're showing that it is higher than a reasonable valuation, which is also the same thing that Investing Pro is saying. So both are saying overvalued. But with this high IV, let's just look at how much premium there is in the options. So if we go down to the 587, what date is this? This is March 14th. Let's go out to, let's just play something a little bit further. This will be 37 days to expiration, the April 17th. If we were to go down to that 577, which is a fair value to buy that, Typically, when I'm selling puts, if I'm looking at fair value and the premium that I want to collect for a 30-day trade would be 1% of this, that would be like a pretty decent return if I wanted to just do like a campaign. With this high volatility, there's huge premium in here. The price right now, instead of being $575 or $575, is $21. We're getting 4 times the typical. When we see this, what I like to do with these is play these pretty aggressive trades. Like I might play this $575 and collect that $21. But what we can also do is we can take some of that $21 and you can buy a spread. So if you go down here to the 585 and you also sell one here, and then I'm going to flip over. I'm just doing this manually. If we were to buy, say like a 595. So selling the 575, collecting $21, selling the 585, collecting $24. I've now collected $45, 4,500 bucks. I buy the 595. Well, it only cost me $2,900 to buy that. So I am net, what am I net? $1,500 still for this trade. $1,500 gets deposited into my account. This is a $5,700 or $57,000 trade. It's relatively large, but there's lots of premium there. I can define my risk. I can use some of that money and buy and make this into a butterfly. I can go down here, the 530, and I can spend another $1,000 bucks. So I'm still collecting $500 for this trade, and I have the potential of making $1,000 return. Now there is a loss zone on this as well, but the loss in this case would be about $4,500 minus the $1,000 bucks, so $3,500 to the downside minus the $500 I start. So $3,000 worth of risk to potentially make $1,000 bucks, and the short is right at the fair value level. So these are the kind of things that I like to look at and to say, okay, well, can this condor, this is a broken wing condor, would this set up nicely? If the stock drops below 585 and 575, I make $1,000 bucks. If it stays above 595, I get to keep the $500 that I collect to open this trade, and I have about $3,000 worth of risk. Now, typically, if I want to manage these, if the market continues to slide, what I would do is I would set some sort of exit parameter and say, if I've collected, $500, I might exit. I might exit the trade at 3 times or 4 times that initial credit, or I would watch the break even and say, well, the break even is going to be around 565. If it hits 565, I would exit there. Those are 2 different styles of managing that type of trade like this. Mike says, can we look at the fair value of AMD? Absolutely, we can. Let's look at AMD. That's a great question. I've got a fairly neutral trade on AMD myself. I've got a little bit of long delta. The current value at Seeking Alpha, in the marketplace right now is 97.37, up 0.77%. Quant rating on Seeking Alpha as a whole, the valuation is considered a B, and it's profitable, and its momentum has been poor. If we look at the 1 year, it's down 50% year over year. Not such a great trade, and I really don't know why. I mean, I actually have friends that work at AMD. I thought that this stock would be doing much better than it is. Let's take a look over at Investing Pro and look at the fair value. So this is where stock is trading at $97, fair value at $115. This is 18% below its fair value calculation. And we have multiple paid services that are doing these calculations, and we can compare these. And this is one of the benefits of being, a member in my group, is that if you've got questions like this, it's very easy for you to ask and say, hey, let's take this stock. It came up on my radar. What are the potential plays? What are the potential outcomes? What is the fair value? How do we make money on this? Are we playing this with like a diagonalized ratio or calendar spread, something like that, where we're selling some long calls against we're selling some calls against some long calls that we're purchasing and doing like a leap strategy that pays us monthly. These can be good situations to enter these in. Or do we do it with a defined risk like a butterfly or a condor? Do we combine multiple strategies. That's one of the things I like to do. You know, I put on a short put on Tesla today, and then I installed a butterfly over top of where the short put is. What that does is it gives me still plenty of premium to the upside. It's a bullish position. And actually what I did, I even went one step further, which is a bit unusual, but I actually bought a bull call spread as well. So there's so much premium in Tesla right now with this volatility as high as it is. If you're able to sell a single short put and then just use some of that credit to build a nice big butterfly on the downside, so you've got a little further down break even, and then build a little bull call spread at that fair value calculation, and all of a sudden I have a trade that makes like 1.5% over the next 10 days, and then it has wings to either side where I can just juice that up even more and make almost 4% return on a cash secured risk. If the market continues to sell down, not only am I collecting credit for these types of trades, but I'm also able to roll that short put out when the premium or the VIX is even higher. So these are great times to deploying our dry powder. You know, you hear people talking about this all the time in trading groups. They're saying like, I reserve a certain amount of my capital for these times. Well, this is the time for those. You know, there's how much higher is the VIX going to go? I mean, we're at a 28% VIX right now. We've been creeping up to it. It's not like it's just come out of nowhere. And it's different than these spikes. But what I'm doing now is I'm layering on these trades and taking advantage of iron condors and ratio spreads, and especially undefined risk when we have VIX as high as it is. That's kind of the key to making money, being able to recognize that some of these companies are trading at fair value. And yes, they may go down, but the opportunity is there. If they don't go down, we make money in these time frames. So it's a pretty great time to be an investor and an option trader in these limited times when this is available to us. Mike says, I think AMD is a great company. I use their PC hardware. They are terribly beat down. Yeah, in general, I think that stock, and I can't quite wrap my head around it. It's like, why was all the hype going into NVIDIA? I mean, like AMD has, yeah, I don't know. I can't like, I just don't understand. You know, these companies seem so closely aligned, and yet AMD's stock has continued to suffer. So for my portfolio, I actually have long delta in AMD. I actually have had for quite a while. So I'm actually down on my AMD positions, but I am slowly building into those, and I am adding to them at these levels because I know that when as an investor, I don't put all my eggs in one basket at any time anyways. I'm often layering into these positions. So I'm looking for the things that are saying, okay, well, when are we going to see an push up in these particular stocks right now? Are they at a good valuation to be buying or going long? And that's what I'm looking at. What other questions do you guys have? I feel like it's a little light today. So jump in and give me some tickers and we will take a look, because I don't have much else to say. I'm like, we're head deep in tons of trades. I got tons of emails this week, which is fantastic. I'm working on a couple little video projects that are going to be great, just kind of informative little things. If you guys aren't on my newsletter, make sure you head over to drawbridgefinance.ca and get on the newsletter. I do send out an email weekly. I didn't send one out this weekend, but I will do so in the next couple of days. I typically send them out on the weekend, and we're just getting into a great time where there's lots of trades. So I'll be putting some trade ideas in my newsletter on that next round, and just saying, hey, check out what I'm doing and what we're looking at. You guys have any other questions? See, there's 14 people online. I got a couple of likes, which I appreciate. Thank you so much. If you guys could let me know, I'll pull up Seeking Alpha and we'll give you a few more minutes. And if you've got some tickers you want me to look at, we'll pull them up and look. And if we don't, then we'll call it a day, and I'll see you guys next week. I kind of let you run the show, so to speak, because if you have questions, then I hopefully am able to answer and have a decent discussion about it. So if you could just type in the chat, let me know exactly what it is we're looking at, and then I'm ready with my keyboard here. So I'm just going to look at XOP while I'm waiting for you guys. This is down 12% on the year. It's got a dividend of 2%. These are the types of things, QQQ leaps. Yeah, absolutely. This is a good time to be potentially loading up at these levels on things like QQQ or QQQM. I think it's an underrated NASDAQ ETF. So let's take a look at that, and we'll look at the pricing. When volatility is very high, like it is, it may not be the best time to be buying leaps. It's hard because when the stocks come down, it's when you want to buy them. But usually the volatility is a little bit higher. So you have to really make sure to go out in time, or that you're collecting some sort of premium against them. And I'll show you a setup that I like to use. This is the XOP. I would definitely be considering like trading condors and things like that on oil and gas right now, especially things if broken wing condors that have no upside risk. If we do see some price action to the upside, I think that it could be kind of nice. I'm going to pull up QQQM, and we're going to look at, so over the past year, it's up 9%. So this is a NASDAQ ETF. One of the things I like about it is that it's a little bit smaller product. So the price right now is $195. If we compare that to QQQ, the price is $474. So for a single lot, we're talking about a $47,000 investment for 100 shares, and that's pricey for a lot of people. I know there's lots of traders out there that are looking for exposure, but they can't necessarily afford to be buying ETFs that are that large. So if we go to QQQ and we look out at the options chart, and what we'll do is we're going to stay on calls. I'm going to just go out a year and say, what is the March 20th, 2026? So this is just over a year. What is the 474? Stock's trading at 474. So what's the 475 leap cost right now? Costs about $5,000. So we've got, this is calls inputs. We've got the calls on this side cost about $5,000 to buy this. Now, much, much cheaper, obviously, than buying the $47,000 worth of options on the Qs right now. But that full $5,000 is at risk. When we buy stock, we don't have any value decay or any extrinsic value decay. One of the ways that I like to offset that decay is by using setups that are a little bit creative, so to speak. For example, we could sell the 475. So I'm going to just change the color here. We could sell the 50-50. I'm going to show you a call zebra just so you're aware of what I'm setting up here. And then we could go down to the 460 and we can buy two of these. Now what's going to happen there if we do that? We're going to pay a debit of $12,000 to buy two. There's two of these contracts of the 460. And so it's going to cost $12,000. And then we're going to get we're going to buy or sell one of the 475s, and we're going to collect 5,000. So this is actually pretty easy math. This is going to cost a debit of $7,000. Now, the interesting thing is what happens at expiration. Let's say that the NASDAQ just for a year from now is trading at exactly the same level. Now, for somebody that bought the leap, that 475, for $5,000, this 475 in the future would be worth nothing. So the total loss, if the stock wasn't to move, would be $5,000. Now, in this case, if we did the call zebra, at expiration, there would be this 460 would actually have $15 worth of value, $1,500 in value. And there would be two of them. So if there's no move from the $7,000 investment, you would get $3,000 back. The cool thing about that is that you have similar exposure to the upside. So the call zebra, if the stock is at 475 next year, is still going to lose money. It's not like it's a magic bullet, but it's losing less. It has cost $7,000 to enter, and then it would be worth $3,000 to close. So the net loss would be $4,000. This is $1,000 difference if the stock stays at the same level. we get almost the same delta to the upside. Now, I don't have a trading platform open that shows the delta values on this, but what we do is we have less theta decay over the course of time. We have slightly more risk. If it does sell off to the bottom, you know, obviously $7,000 cost to open is greater than a $5,000 cost to open. But we could be very strategic about this. We might just add $600 in risk. You know, you sell, what color do I have? Buy 2 of the 470s and then sell 1 of the 475s. And what that does is it gives us basically a $5,300 cost, but at expiration, you would, at this point in time, if this expired, or sorry, it stayed at 475, this contract would still be worth $1,000. So you'd actually again have less risk if the stock didn't move. Still upside potential. So I like the call zebra. There's trades I like even more than that, and that's where I might buy some at the money options. I might buy like 3 of these, and then I would go into a shorter duration and I would sell some calls against that. But I would buy more leaps than I would sell against them. And then that gives me some long deltas as well at these levels. So there's lots of different ways. And it's why, you know, it's why I have my chat room, so we can look at different trade ideas and different setups for these types of things. I'm going to jump into, oops, what am I doing here? We're going to jump into QQQM, and we'll just look at that, the price of those options. If we were to go out in time, we can't even go out to a full leap. We can only go to December 25. So that might be a reason to trade QQQ. Stocks trading at 195. And if we were to look at the December 5th or December 19th, 2025 contracts, the 195 cost about $18. So to buy that, you know, an $1,800 investment rather than the $19,000 investment it would cost to buy the shares here. Definitely with the high VIX, what I would want to be doing is selling some calls or some call spreads against this to mitigate any potential losses, and that caps our upside potential. So I would go out here and I might say, even if I'm collecting, you know, kind of minimal, $60 to sell a short duration call, lots of room for this to run up, you know, from 195 to 215. It's got $20 of room, and it's negating some of that decay by collecting this $60. So something to consider. I like to trade my calls quite close, so I do them as ratios, and typically just buying more longs and selling less shorts, and then gives me my long delta on those positions. Mike says, I hate monopolizing the chat, but what are your current thoughts on the roundhill idea? I'm still in, but the dividends were quite a bit smaller last week. Absolutely. So when the volatility, no, please don't think if you and I just chat the whole time, then that's great. We get to have the chat. I don't think that nobody's monopolizing the chat here at all. You know, I would love for there to be way more chat. So please monopolize away. Let's go for it. Let's jump into the roundhill stuff. YBTC. You know what? I like these. My timing might not have been great when I've started to buy some of these. YBTC trading right now at 40.27. Let's just look at this dividend. The quant rating here on Seeking Alpha is a strong sell. They just like hate this setup, but you know, these are unusual strategies. What do we have the dividend here? Is it going to show it? The dividend yield right now is 50%. So the strategy is crazy. You know, they're selling covered calls during the day. Covered calls and short calls in general, when the market is going down, are not huge. So this has the double whammy of having exposure to the downside, and it's the same as if we were trading the wheel. You know, I have positions in a ton of the indexes right now, and tons of ETFs that have exposure that have come down from these levels. You know, if we see the IWM coming down almost 20% from its highs, This is a time where I usually scale back my covered calls. I don't want to get into a whipsaw action. I know how the market works, and I know there's going to be drawdowns from time to time. When I'm holding a bullish position and I get into a tight space, so to speak, and the stocks have come down, if I own the stock, it costs me nothing. I'm not selling at those levels, so my account valuation has come down. Who cares? It's actually great for these types of positions. Like my entry on YBTC was not that long ago. I bought some at $50. I bought some more at like $48. Now it's trading at $40. It means that this dividend that I'm getting right now, even if it is smaller, is still proportionately very large. It's actually, to get a 50% yield on a weekly basis, it's paying almost 1% a week. So that means if I started with 100 shares, then I am getting enough to buy one share every single week. If they're trading at a 20% discount from where I'm buying it, I'm just getting in more shares, and those new shares are trading even a higher percentage from a dividend point of view. So for me, what I'm doing is I'm looking for entry always on these positions. And if we were to look at Roundhill, or this RDTE, this is again slightly smaller returns on the dividends. Dividend payout right now is still 20%. Now, these are massive potential. They have upside potential, they have downside risk. What I want to do is I want to be deploying capital into this. So I am sticking with them. I'm gonna, I'm not one of those people that like jumps around quite a bit. I do my research on stuff. I analyze it to death. I start a position, I add to those positions, and I continue to churn it out. So in a year's time, I will be able to sit back and say, okay, how did this perform? Right now I am considering shifting my SPLG covered call position because I've been in that trade for 2.5 years. So I have given that trade due diligence, and it's like I have been through this drawdown and I've been through some up moves, and I've looked at it on a monthly basis, and I've done those trades. This is the only way to establish whether or not we should be continuing in the current market or not. So that's kind of how I'm assessing Roundhill products right now. I am long. I have some, and I intend to add more as those dividends come in. Now I'm also being a little bit strategic and looking at the market in general. I am not just like one of these people that loves to just get in. Look at the NQ futures are up. Crazy. We're having a little bit of a bounce. I'm interested to look at the 1 minute on this. I'm just going to flip over to the 1 minute. Yeah, wow. Okay, so here's the NQ minute futures on the 1 minute. Great little drawdown. This morning, my patrons know, I put in a trade at 7:37 Pacific Standard Time. So right here, I'm pretty happy with that timing. That was when I entered my day trade today. So I was in here. I was out when it crossed back down onto this moving average. It was excellent timing. Part of what we can see, if I turn on that visible range, this morning, basically what happens is these bars start to run out. So if you look on the right hand side, you kind of have these blue and yellow bars, and as it moves down, the buying and selling just depletes. And at this point in the morning, there wasn't, these 3 bars weren't even here, and there was very, very light selling and buying. And we knew from the volume as it had come through, it was just depleting. And you can look at the MACD as well. Whether or not we're seeing, this is a volume weighted MACD. So are you going to see the turn? Hadn't really shown it there, but I was looking at these visible range volume profile bars, and I have learned to love these. In fact, I'm using it much more than the MACD indicators here, but that was my signal to get in this morning. And then what happened was we saw that rally through again this visible range and up into an area where there was very, very little selling, and we're pushing outside of that now. The range right now, or the point of control, is at 19,468. It's interesting because prior to the stream, it was just before the stream was starting, and I was getting prepped, and I'm like looking at it thinking, oh, we're going to push right up to this point of control again. We're going to get back into that main range. And, it's one of the unfortunate things about being a trader and then also doing streams during the session is that I don't love to put on trades and then completely ignore them. I would prefer to kind of be paying attention while I'm in a trade, especially if I have some sort of trade that I want to have a manual exit on. I don't run any algorithms that have something that I would get stopped out on or anything like that. Not when I'm at my computer. I can just trade these as they go. So not surprising that this push up happened, and not surprising that we're seeing it peter out at these levels. There's almost no buying above this. This is so where are we going to hover? I would guess that we'll come retrace down from this level, and we will be closer to this moving average. If we closed around that 19,400 level, it would not surprise me in the slightest. John Blake is arriving. Awesome. Good to see you. And thanks, Mike. Appreciate the feedback there. What else do we have? I feel like I'm petering out today. I don't know why. Has the market been grinding on us a little bit? I just feel a little bit like less chipper than normal. I'm usually pretty good, but I feel maybe it's because I've been eating lots of delicious food with friends. The weather's been good here, and we've been just out way too much socializing, if that could even be said. But there's been a lot of that. It's been a good year so far. I feel like I'm going to cut this short. I don't have much else to say, so I'm going to push this button that says "Let's get rich together." For those of you who arrived late, like John, glad to see you here, but you have to go back and watch the replay. I'll keep it live for about another week so you can catch it. And I'll see my patrons on Thursday in the live stream then. Thanks everybody. Let's get rich together. Take care. Bye.